All right, folks. Maybe we have the villain who actually prepares the CPA exam at the AICPA. Not sure if he or she looks like that, but sometimes we do believe that, don't we? Well, that individual is WCIDS, right? They're WCIDS for some of the questions and obscure questions they ask us. So what we want to remember is that you have three categories. You have your operating, your investing, and your financing. The W and the I are going to deal with the operating activities. The W is your working capital changes, which include your sales proceeds from assets sold at the discretion of the not-for-profit without donor restriction for long-term purposes. We're then going to look at the I, which is your income statement activity, and that's going to include contributions without donor restrictions and, of course, agency transactions. Aggregating all of those up, and remember, of course, you have your changes in your current assets and current liabilities. So you're going to see typically your increase in net assets, then you'll adjust it for things like depreciation expense, then you'll have adjustments for current assets, current liabilities. Very, very similar to the for-profit organization. Then what we're going to see is the second category is the C and the I, and that is going to be your investing activities. That will include capital expenditures when you purchase new PP&E, as well as proceeds from the sale of investments and, of course, items used to buy investments. There's your C and your I. And then finally, we have your D and your S. That's going to aggregate up to your financing activities. And that can be for things like principal payment on debts, and then securities of indebtedness issued, retired, or repurchased, other contributed resources with donor restrictions to use on long-term purposes. And that would include sales proceeds from assets sold at the discretion of the not-for-profit with donor restrictions for long-term purposes. And it also includes cash contributions with donor restrictions for long-term purposes. So cash received for fund endowments would be a classic example of a financing activity, and payments on notes payable and obviously borrowing of money would be other financing activities. You'll aggregate those up. You start with the beginning cash balance, then this aggregated amount is the change in cash, and that should equal your ending cash balance. So straightforward information. Hopefully you'll remember WCIDS, and what we're ready to do is now try a full test-based simulation.